Hello, Warriors. Second half of the doubleheader PCE today. Everyone ready? Hello, Louise. Bom dia to you. Maybe the M is silent. Angelo, Ingmar, Mike, Glenn, AJ, Bran, K-Man, the team, Blake, Ryan, James, Khalid, how are you? Khalid, how many years have I known you? All right, let's go to work. So, how's everyone doing today? Ryan, Blake, K-Man.
Hey, Dale. Hello, everybody. Yeah,
Morning, Dale.
morning,
Hey,
coach. Doing
guys.
nice, doing fine.
Everyone's doing okay. So Paul kind of pushed back on the great number, and a lot of things he capped. The cork was out of the champagne bottle, and he put it back in. So that's why we've had this recovery here in the Dixie, and um, gold was up sharply and gave it back. Gold looks pretty negative to me. New lows, I think, are coming there. Silver as well. So on everything, TLT was really making a move and double topped up there. So, I still favor that we're going to break out here. And then some key areas. Look at where CAD held on the 4 hour. Okay, so um, yesterday's low is key.
Yeah,
All right.
Dale, that was back testing the broken trend line, which
Yeah.
is that broken wedge basically. And yeah, that was a really, really key level to hold. You're right.
And what a champion the yen was, the way it fought its way back from being down 120. So,
Yeah.
I have no idea what happened with the BOJ. I'll bring one of the flow show guys in. I know you're probably tired of talking about it, and you're going to repeat what you said an hour or so ago. But Ryan, let's start with you. Your impressions on BOJ.
Not much to talk about really. They're going to the only real potential is that they cut their bond purchases, and the market will move depending on how much or how little it sees those going through. Really, it's all going to be about the forward guidance for future rates and how they're going to give an update on the low inflation that they've seen or the lower inflation they've seen, as well
Yeah.
as the crappy Q1 and how that's not going to matter going into the new fiscal year.
Okay. K-Man, you look at it the same way as Ryan here?
Um, I think your description about uncork the champagne and put the cork back in is pretty much bang on it, right? If you look at everything that's happened. Yeah, I mean, if we were data dependent before, we are super data dependent now. The only thing I would say, and I said it on the flow show too, is that Powell still doesn't want to hike. That so much is clear. Some real shock should have to happen, and I think we are indeed super data dependent now because him and them keeping and going to only one cut can change completely over the next meeting, I think, and they could be the weather vane. We could have some weather vane FOMC meetings coming up and still end up having two cuts this year, but. In the meantime, we know what the market has to do: reprice the repricing and reprice again.
Just an observation, with everything that fought back, like the dollar fought back and everything. I mean, look at the dollar resilience compared to the 10-year. And I'd say that the 10-year had the weakest recovery of everything after Powell pushed back on the number and we went to one cut. So the market, I guess FX traders uh, believe Powell more than government bond traders. So, that's still
Differentials,
look.
big. Oh, Dale, sorry. The
Oh,
differentials
no.
is
Okay.
all about the differentials.
Okay.
The other yields are a bit sluggish too, and
Okay.
They haven't moved much, the differentials really, and I think that's perhaps where we have to find it, you know. And also FX volatility is quite suppressed. There was some event risk in stuff like the euro dollar, which is the closest to the Dixie. And if you look at FX vols coming out of the events, they are pretty miserable.
Okay. So I guess the big question is the low that the euro put in, is it going to be retested again? Um, could be, right? Or you look at what's not Friday yet, but
Mm.
I mean, euro was the weak sister. Blake called the breakouts in, you know, I remember early in the week, I think it was Monday, and the euro was down to 730, and I said I couldn't buy it because of the way
Yeah.
Euro pound was acting, and it was the weakest. And
I can I
but
can't buy euros either. It's these European political things could hang over the euros head for another good few weeks, and I think if you again, and I'm just in the same still in the same mindset. If you want to be short dollars, there's perhaps a better instrument than the euro dollar. If you want to be long dollars, euro dollar comes into consideration. That's how I look at things right now, just because of that political overhang as well that we have.
what's the political overhang?
Well,
The right wing.
all those elections, you know,
Yeah, that's right.
the Macron doesn't know whether he's trying to find back, but he may not have a choice of going into stupid coalitions to prevent extreme right or the far right to come into the frame. And Belgium is now trying to find a new government as well. It's I don't know. And then just a few minutes ago, we had a bit of news. It's small, but Germany may need to fund an extra 11 billion euros. That puts their what they try to do, the net zero budget again a bit more at risk. So I don't know. I still don't like the euro.
Okay. I mean, no one's even talking about the Russians bringing a nuclear sub to Cuba, because it's just, looked at as gamemanship. But, it's an escalation. So I guess Putin's trying to show Biden what it feels like. That's his argument he's made all along, having U.S. weapons at their doorstep. So tit for tat here. So I don't know. How far can you go? Just it's like two guys squaring off, and you don't know who's going to throw the first punch or if it's going to happen. But it usually happens when two people square off like that. Someone hits the other guy. So makes me a little nervous with what's happening with Russia everywhere. I mean, the market doesn't care. Um, the S&Ps came off, but again, I don't think that you know I'm not ready to call it top. There are a couple observations though. S&Ps and Nasdaq blowing off, and Dow not doing much. I still think it may has a chance to test those highs. And something that I think should bother some traders, since Powell said that all the banks are in a very strong position, then why does the XLF look like this? I hope it rallies to one more high, because it's not acting like its relative weakness is what I'm looking for. So here it is. You see it in the banks, and even one of the MAGAs with what NAS has done. I mean, look at this. I mean, NAS has been the outperformer, right? Look at that. And that still has not been enough juice to take Amazon back to the high.
Well, that's just telling you that, it's just also really concentrated in just a few different stocks. Yeah, I mean that's all it is. It just and I actually read a post or you know some news on it, news some analysis on this just the other day about you know this you know just culmination of just a few different stocks just pulling the whole market up, but it's not something that's necessarily uncommon. It happens, you know, quite a
Yeah.
bit. It happens to be right now, and with these tech stocks. And the thing is, and it's hard to go, oh well, this is just another .com bubble, because these companies are making a lot of freaking money. You know,
Yeah.
that's the thing is you've got so much money that's being made by Nvidia. You saw Broadcom, right? I'm gonna try to pull it up right now. Um,
There's NVIDIA. I said about 130, so we're getting close. It was 1300 before the split.
Um,
Yes, go ahead. Okay.
Blake, Dale, I mean, while you're on the equity markets, Ryan had a very interesting point to make this morning on the Flow Show. Ryan, I think you should repeat it here regarding the buybacks.
Oh yeah,
Yeah,
go ahead. So Apple's buying back a big. What else?
it finishes tomorrow. The buyback period closes tomorrow. So if stocks are going to hold up, then on Monday they might need something extra, because if that bid's not there on Monday, and there's a lot of short term longs who have chased this higher, they're going to find a bit of potentially a bit of a black hole underneath them.
And we do have option expiration next week.
Yeah.
I forgot what else we have besides the solstice.
Yeah.
Which
So if
I pay
this
attention
move, because this move high has been pretty strong, it seems a bit too strong from what the news is from the Fed. You know, they're not cutting rates tomorrow. So if this bid is a bit of that buyback stuff, as I say, once that evaporates, market's got to stand on its own 2 feet.
Yeah, I'm looking just a best guess that maybe they could push it into expiration.
Yeah.
And then I'm going to try some of these. I'll try if the XLF gets up there into that time period for 3. That's what I'm looking for, 3s. And I don't know if the Dow could do it. Maybe. But
Well,
anyway, these are laggards. So if it takes a blow off for these guys just to make marginal new highs, that's the point. You're shorting the relative weakness. But then the strength will probably, just crash, and the relative weakness will be steady. But
Yeah.
anyway,
Well, I know. I think myself and Kay are going to be maybe parking a couple of cars up at 55 in S&P.
okay,
Kay's going at 55. I'm going at 54.99.
okay. So that's still a decent rally from here. I think that the dollar it shouldn't explode under those circumstances. So even before the number, it's not my style, but you know, um, the short dollars I took in half yesterday, I put them back out here today. So, if I get blown out on a hot number, I do, but I have to think that this looks weaker than, say, for example, well, Canada looks like a sell with stops over the highs too. So, I think that there's a couple of trades I'm going to go with that the dollar gives up its gains, and that might be the fuel for us to get to 5,500. So we'll see. Maybe we get another benign number that then Powell will send out Williams to push back. Anyway, those are my thoughts before the PCE.
we have actually it's PPI today, Dale, but yeah, it's the second leg of that. It's just another component feeding into the PCE.
Poor
Correct.
People's Index.
There we go. So I'm gonna just show you guys. This is Broadcom, just in case you guys missed it. I mean, it's up 14% pre-market and breaking out. I mean, I mean, just is a huge move.
Monster.
I mean, look at this. Look where it's trading at pre-market. I mean, monster move, dragging up the entire semiconductor index. And that happened. I think it was earnings yesterday, and or the stock split and all sorts of craziness. So, I hear that Grega Horvat is here. Grega, how are you?
Hey, I'm here.
Hey, what's going on?
If Greg is here, I'm off.
Well, just so you know, this is the ForexAnalytix community. This is the Euro 2024 community we have going on, and Grega is or actually Ryan is harassing Grega about being. No, look at this. I got to make sure everybody sees this, Ryan. My dad's great uncle's aunt's sister, just dad's mother's daughter's boyfriend cat came from Slovenia, so it's in the blood. And then there was like oh, here we go. Let's see, Grega and Ryan going back and forth about, yeah. So Ryan, why don't you explain yourself to Grega live on air, please?
Yeah.
I have nothing to explain. I didn't pick the numbers. It's part of a draw for the Euro 2024 competition. My number was Slovenia, so I'm
Serbia.
stuck with that till
at least you Googled. At least you found the right flag, because I mean,
of course,
there's a lot of confusion between Slovenia, Slovakia, Russia.
So yeah, I know how to Google, mate. Don't worry about that.
Anyway, all right, let's talk about, Greg. What are your thoughts following the markets? Because it was obviously I call it a nice neck break move, because I ended up taking a lot of my dollars off. I was long Aussie yesterday, then I should have reversed, but I didn't. And but there's some crazy moves yesterday. What do you make of all this, and where does your Elliott waves take us from here?
Well, I still think that dollar in general will see more weakness, but I'm just afraid that maybe we will stay in some kind of a summer range here. Stocks have made a pretty impressive run over the last few weeks, and seasonal charts also suggest that the S&P 500 or stocks in general could slow down, especially when you have strong months like May. So I think that there can be some correction coming, and this can maybe possibly keep dollar index sideways here. But if we look maybe after summer, I just still think that the next big leg will be to the downside on dollar index or dollar in general.
You think it, and then you look at the Aussie failed at the flag top, sterling failed above 128, and it's obviously feeling the heat today. It's hard, but as K-Man pointed out, and obviously following yesterday's Fed meeting and listening to Jay Powell, I mean, he explicitly told us that data was nice, the CPI was great, but we need a lot more of that. So that means they were nowhere near cutting at this point, but they just need to see a lot more good data like that in order to move. So but so it's hard to sell dollars when Jay Powell says that. I mean, I don't know, but and you're seeing the failures all over the place, but you still think that the dollar's got some downside here.
Yeah, but of course, I would be looking for these dollar shorts after the retracements. Maybe they will decide for cuts after summer, maybe during the elections. Maybe they don't want to rush with the cuts, because then inflation could again go even higher. And obviously, there is no chance that they will have to turn hawkish. Inflation is up again during the elections. So maybe that's why they will save their bullets for potential cuts after summer. And that's when I also think the dollar could see a very big drop. But when we look at Aussie or Kiwi, I still think that these are very good, very strong currencies that could potentially see much more upside. But obviously, as you pointed out yourself, this could be now some kind of a resistance in the near term, and possibly we make some retracement. So after corrections, I just think that the next leg is higher on those.
And I'm with you here, as far as like the dollar is going to look better, or look worse against certain currencies. And I'm going to go back to what K-Man said, and I agree. I mean, the euro is a hard one to buy right now. I mean, and that's the majority of the dollar index. So if you actually see the dollar index coming down a little bit, you might actually see it reflected more in sterling. We could literally have like cable trading up at 129 and the euro's struggling to get above 109, or the Aussie breaks out above 67 cents and the euro is still trading below 109. I think there's going to be that underperformance of the euro, and it's going to be quite apparent.
I also think that today's US PPI data could cause maybe quite an interesting moves here. Can I share just for a second chart?
Yeah, absolutely. Here you go.
So if you're bearish the dollar, Grega, still, we shouldn't take out the highs at 105.50, should we?
That's a pretty nice resistance for this week, yeah, for sure. So as long as we are below this level, I just think that maybe intermediate weakness could be seen. But as I said, US PPI data today could be very important. Now here we have, if I hide this, so we have the US CPI in blue and you have the PPI in red. You can see that they are diverging a lot. And if we add this crude oil, you can see actually that crude oil has been basically trading to the downside through April and May. So I just still think that because correlation obviously is there, that there is a chance that US PPI will actually turn around here. And expectations are 2.5%. The previous reading was 2.2. So I think that there can be numbers below expectations, and this could possibly trigger some dollar rally. So I still think that overall this appears to be a pretty nice correlations, and maybe the US PPI will come down.
Sorry guys, I just had to I had to respond to one thing today, but Dale, did you have anything you want to say about that?
No, I asked the question. He answered it. Yeah.
Got it. Okay. Sorry, I was actually responding to somebody.
I know.
Hey, real quick.
You.
Real quick, Grega, what do you how do you feel about the yen ahead of the BOJ? And everybody knows that first of all, the BOJ is expected to, or potentially is going to adjust their GGB buying and drop that a little bit, maybe. I know Ryan and K-Man are going to be in the ForexAnalytix community tonight, staying up really late, or getting up in the middle of the night, or however you guys are going to do it. But even if that does happen, it's been pretty well telegraphed. So I don't know how much of a response we're going to see in the dollar. What are your thoughts on the yen as far as a move here?
Well, I think that dollar yen wants to maybe to clear some stops out, liquidate some of the shorts here. That goes back to end of April, when Bank of Japan actually intervened in the markets. So that's a pretty interesting levels. Maybe we just spike up here and then we see a reversal back to the downside. Now in Elliott wave terms, that's certainly a very important level up here around to 158 as well. So as long as we are here below these highs from April of this year, I just think that there is a chance that we are trading very, very close to this important resistance here.
Yeah.
All right. Sounds good. And one last thing I want to ask you. Well, actually, if you don't mind, I'm going to take over the screen because I got to get ready for this data coming out. I did want to ask you though, really fast, your views on gold, and let's
just go.
Whoops, that's silver. What's that?
Just buy it.
Just buy it. Well, okay, so that you do not feel, and I'm sorry, here it is. Forgot where I had it. You don't have gold breaking down and giving us a double top. You think this is actually going to is going to continue higher?
Yeah, I just still think that, as we discussed already last time, we're just testing these support levels back and forth in the near term, but eventually we just cannot ignore the higher degree uptrends. It's still there.
Yeah. All right. Well, I mean, if there's going to be dollar weakness, then gold should follow suit. I was just talking to Michael W in the chat room, and about like, man, if you do think precious metals are going to bounce here or are going to hold, then gold should be on your radar at these levels. I mean, 2280 is really key support. Well, Grega, thank you very much for your analysis today. We appreciate you stepping in, and go Slovenia.
Yeah.
Hey, real quick, Dale gave his views on what he thinks is going to happen with the market, that the dollar is going to give back some of these gains that we've seen overnight. Ryan, what are your thoughts going into today's producer prices, unemployment claims? What are you thinking here?
Yeah, it's just either going to add or take away from what we got yesterday. I think we're going to need to see a big variation though, and PPI can be a bit volatile. But I think my thoughts post the Fed and NFP and CPI and the rest of it, I think we're possibly back in that mood before the NFP, where the market was happy to sell dollar rallies. It knows the Fed's still on the path to cuts, no hikes in sight. So I think any data that adds to that view that cuts are coming, I think we'll see the dollar get hit on it.
You know, look at the last several months. PPI did come in a little hotter than expected, so it'll be interesting if that trend reverses this month. And what currencies are you specifically looking at, Ryan? Like which ones got your attention right now?
Dollar MEX, that's the one that's mainly on my radar at the moment. I'm still managing some Kiwi long, but yeah, Dollar MEX is got plenty of volatility in that one, and I don't think we're done just yet.
Big time. I've actually got some bids down below. If you're in the ForexAnalytix community, you know exactly where my bids are at. K-Man, what are your thoughts here going into producer prices?
Yeah, pretty similar. Needs a bit of a big variation, but as I said, we are super data dependent. So any market is still hoping for misses, right? So that's probably going to drag out more, or well, at least an attempt to sell the dollar again. And that's about it. I'm yeah, very little confidence in the euro. So I won't buy euro dollar if it's a weak number, even though euro dollar will follow suit. But I'm not going to buy euro dollar. But I mean, I'm rather looking at stuff like the Kiwi or so.
I'm with you. I like what I like how you're thinking here. And this is the euro range that I see right now. That you got the 618 that obviously rejected price yesterday. You know, it was following CPI yesterday. We sent out an update that you had to be really, it had to been, or it was in the chat room. You had to be really careful because we're at the 618, and we failed from there. And now you can see that between this level right here, which is 107.75, that's your support. You know, when we updated the market this morning, we knew that level was going to be really key coming in. And so, you know, buyers are stepping in now ahead of that data. So you can see this range is very well defined. I don't know if I'd play that range either. I still prefer sterling, but I am cognizant of that false breakout. That does concern me a little bit. But the Aussie, you know, right in the middle of a flag, and the Kiwi,
you would call that a false breakout, Blake. Normally you would, you know,
of the Aussie.
Yeah.
I mean, it is, but I like to think that everybody's looking at this charts the same way I am, but I don't know if that's necessarily the case. You know, I do think it's a false breakout, kind of like the sterling, but then again, we're at a major, you know, trend line. This is a multi-year trend line here. This is really key resistance. So, and you sit there and you look at the dollar and go, it is still vulnerable, you know, based on data. So, you know, if the data is weak, let's say weekly unemployment claims and PPI, if they both miss today, Aussie's going to be trading back up there again. And that you can't deny, you know, that's the kind of way I have to approach it right now.
Pointing out the structure.
Yeah. It's but
I
yeah,
mean, we can rationalize everything.
Right. Exactly.
Well, you know, it's a false breakout if our narrative is negative.
Well, you know, that's like that's true. But like sterling, for example, we broke out to the upside, and then we you know, I bought it at 128.20 or 30. And we closed at or we started trading below it at 128.19, you know, yesterday. And I'm like, I'm pulling it off. It's a false breakout. I don't want to be long anymore. So I took a quick 10 pip loss yesterday. But those are the things you have to make those decisions right at that moment in time. based on what you're seeing. And, you know, bias or no bias, you got to throw it out based on what technicals are telling you. And that's
the
what it was
price.
telling me yesterday. You know, it's like, okay, you know, I come to the market with, it's okay to be wrong. It's not okay to stay wrong. So just, you know, if it's not fitting your plan, then get out. We got the dollar index to the left, S&P in the middle, 10-year, and then weaker. Wow. Here we go. Well, what do we do with that?
Well, it's weaker than expected on the headline number. It came in unchanged over last month, and the core number came in 1 pip lower than last month, 2 pips lower than expectations. So it's not a huge differential. I don't know how much the market will flap around over this, but as we said, you know, if the market wants to go back into hitting dollar mode, this is a sort of number that will give it that ammo.
Yeah, I mean, you know, it looks like it could maybe get some steam, but you know, why did that flip it over to the dollar? I'm not sure why. I accidentally must have clicked it. But we can look at the dollar. We can look at that really fast. Dale, do you have an interview coming in today? You do.
Yeah, I have.
Okay.
Dan Hussey Jr.
Got it. Okay. So yeah, I mean, here we are just coming right back into resistance. And it's like, do you really want to buy it? You know, I don't know. It's a tough one, especially after yesterday's price action. But anyway, hey, guys, gals, make sure you're in the ForexAnalytix community tonight, because it's going to be very, very busy with the BOJ tonight. I know we will have a packed house in the chat room. Ryan K-Man, are you guys staying up for the event?
Nope. I'm off tomorrow and Monday, so it's all down to K-Man.
Oh, damn. K-Man, I know you're going to be around.
Well, if my old bones permit, I will be there.
But Ryan, I can't believe this. Oh, you are going out of town, aren't you?
Yep.
Oh, all right. Well, we'll miss you. The yen will miss you too. All right. Well, Dale, thank you so much for guiding us today, and have a great interview with Daniel and Ryan K-Man. Thank you very much for your insights, and we'll see you guys. Well, I guess we won't see Ryan on the Flow Show tomorrow morning, right?
Nope. No, sorry, Bob.
Have a nice weekend, Ryan.
Thank you very much, mate, and you, and to all our viewers and everyone, all the team.
All right.
Thank
I'll see the rest of you guys.
K-Man.
Yep.
Thank you, Blake.
Thanks, folks.
Thanks, Coach.
Thank you, guys. Dream Team. Best webinar on the net. Free or paid. I bet Dan Hussey would agree with us.
Yeah, that was
Aren't we the
fantastic.
best? You know, you look, we bring guys on like you, and people would call them other people competitors. They're selling services. Have you seen anyone else do something like that where they're giving visibility to competitors?
You know, I really haven't. Outside of your major, and I wouldn't call them competitors unless you're talking head on some of the major news channels, right? Which they bring in their typical analysts, but you hear from the same 5 people over and over and over again, right? So you don't get that fresh flavor that you guys bring to the table either.
Yeah, so, well, maybe competitors, just that they have a service to sell.
Yeah,
We
sure.
have a service to sell, and
Absolutely.
you know, we want our people to find the best fit for themselves.
Right.
So,
And there's a
you
lot
know,
of competing, ideas out there. That's what makes a market after all, isn't it?
yeah. And I was thinking about you because I've been following this grain action where I thought it sure looked for a while that we had turned the corner in beans. You still think that maybe we have, and now we're into the growing season, right? Where
That's
it's a real important time frame.
That's absolutely right. Now flip over some charts of the grains right now and give us a quick
Okay.
rundown because hey, why not? Let me see here. There we go. Hopefully everybody can see my screen here. The last
Got
few
it.
weeks and months actually for the grains. Let's start with July soybeans. I've got a big daily chart. This is a continuation chart of the soybean.
I see
Uh,
corn.
excuse me, you're correct. There's
Okay.
our continuation chart of
All right.
soybeans, not so different, but you can
Right.
see that there's been this $8 to $18 very long-term range since going back to 2010 in the
Yeah,
soybean market.
that's a long
It,
time.
it is, and row crops, corn, wheat, and beans, to be specific here, folks, are pretty temperamental to weather, right? And their production cycles, which for those that aren't aware, they're only made once a year in the Northern Hemisphere. There is a South American crop season that is completely mirrored to our growing season here in North America, but the harvest time frame in the fall is the only time we get real new supply that hits the market. So there is a very cyclical seasonal cycle. So if you like trading cycles and seasonality in charts, boy, you should take a look at agriculture, because just inherently by the fundamental, production, they are incredibly cyclical. So what we've
Okay.
seen over the last few years, and coming out of 2020, was generally a large inflationary trend that hit row crops and agricultural products just like it did everything else after, we saw the years of cheap money, the massive
Yeah.
injections of liquidity after the COVID pandemic. And we saw an inflationary cycle that hit everything, gold, silver, bond market, literally everything you can touch with a dollar saw this type of trend. There, of course, though, was some up and down based off of production just in agriculture, but we have more or less, topped out from that inflationary
Yeah,
trend, and now
it's
have.
interesting, Dan. Maybe you could address it, but
Mhm.
beans topped out very close to when the wheat did, which was on the invasion and have been down for a couple of years now, trying to base out. Maybe it's come out of here. So they all kind of did the same thing.
Mhm.
But when you show that long-term chart in beans, here's the point I want to make. People say the grains are cheap, and they are relatively from where they were. But look at where they were historically, and these are not cheap grains. I mean, I remember $2 corn,
That's right.
$4
That's right.
wheat,
And I'm going to pull
$5
up the
beans.
monthly wheat. Yeah, here's your wheat chart, guys. This is a monthly wheat chart. So when you say that it's cheap, right, it's relative to these, 10
Yeah,
highs that were $10 per bushel higher. And these big highs in the wheat market correlate to, back in 2022, the Russian invasion of Ukraine
right,
and the,
right.
temperamental wartime market that we had. And
Yeah,
then back in the early 2000s, or excuse me, 2008, leading into the financial crisis, there was another number of things that took wheat higher there. And generally, wheat can be thought of as kind of a flight to safety fear asset at when
interesting.
times get very, very turbulent, because you have to eat, right? And wheat is a
Yeah,
staple food product in every single economy around the world. It's one of the only ones where you can't find a culture that doesn't consume wheat in some, capacity. So like gold, I like to call wheat,
well,
the
it's biblical.
agricultural gold. Yeah, it is. It is. It
Yeah,
goes back
yeah.
thousands of years.
Joseph,
Society.
Joseph knew when to, 7 years of plenty, 7 years of naught. And you know what I notice on that chart? And people that know my work know I'm real big on the number three. I see two spikes in wheat, which implies that there's going to be another one. Doesn't have to
Yeah,
be, but to me, it looks like an incomplete pattern. If I didn't know what it was, that there still could be one more spike left to complete this move over this last 15, 20 years.
certainly. And that could correlate with other inflationary trends in the market, that if when I like to measure inflation, folks, I also don't look at the highs in the market. I measure the lows to lows. In other words, that's how I measure the rising tide of inflation. Notice how even
Look
though,
at that.
we
You're right.
spiked up to $13, we never really came back down to the pre-2008 lows around $2 for wheat. Now we spike up to $14 to $15, and we never
Right.
really come down to this $4 threshold, the
No.
pre-pandemic, lows in wheat. And if we look at the chart of corn on a monthly chart, it's much the same. There's this
Yeah.
rising low, higher low as we progress through the decades. Soybeans are much the same, a rising low as we progress through the decades. Does that mean we can't go down to $8 soybeans? No, It's just I don't know if $6 to $4 soybeans are going to ever be on the table again, just from the 20 years of inflation we've had since, the 2000 era, where that was a low. And there's been some major changes in the dynamics of demand for agriculture products. Corn and soybeans are not just used as food products anymore.
Yeah,
They're
fuel.
actually that's absolutely right, Dale. They're being traded more like energy products. And in fact, over the next 5 years, for specifically for soybeans, the idea of this sustainable aviation fuel could be an absolute mega demand impact on the market, because we're talking about taking I think it's a $4 trillion industry for aviation fuel, and trying to convert a lot of that now to biofuels, and using soybean oil to create biodiesel, and in this case, biokerosene, which would be sustainable aviation fuel, could create a massive amount of demand from the energy sectors that wasn't there before. And if we look at a chart of corn here on the monthly chart,
Ethanol.
before, yeah, that's right, before 2010 here, this is the pre-ethanol world for corn. So, the chart for corn used to be a $2 to $4, commodity. After ethanol, now we're a $4 to $8 commodity. So we've just ratcheted up, right, the value of the whole range that we're trading in. And that kind of brings us into, I think, a leeway, because into maybe the dollar here, because over this period we've seen similar moves in the dollar, which I think,
Dan, isn't it interesting and tragic that we could end up, a lot of people predicting global famine because
yeah,
of weather everywhere, and that we're using food sources for fuel when
yes,
people are starving. It's always bothered me that there are, people that are hungry, and we're, using foodstuffs for energy.
yeah, and that's one thing I'll add, I guess kind of play the devil's advocate to that is, which is
Go ahead, you're the
always
devil.
we always need to maintain our demand for acreage for producing the food products, right? We can
Yeah,
quickly shift away from using them for ethanol or fuel and start using them for, other things. However, using corn and beans to produce energy, at least the corn and beans that we produce, corn
are
too,
being
and
used.
they're being used for energy products, but they're being crushed down to take out the sugars to create ethanol for corn, and we're taking the
Okay.
oil from crushing soybeans and making it into biofuel. That leaves over a lot of solid mass. In other words, soy meal, which here's a chart of
Yeah,
soy meal on the monthly chart and a chart of bean oil on the monthly time frame. They're the two components that you get from crushing soybeans. So much
right,
like you crack a barrel of oil into kerosene and gasoline,
right.
or diesel
Great
fuel
analogy.
and gasoline, right? You
Yeah,
crush a soybean into bean oil and bean meal. And the
yeah,
combination of bean oil and bean meal, and literally on the charts here, should equate to the value of a soybean bushel as well. And so when we create the biofuels from our agriculture products, we're still left with the meal, corn meal, and what is called dry distiller grain from corn, and soy meal from soy products. Those get used in the cattle, hog, and poultry industries as
right.
food.
Feed.
So we
Yes.
don't waste any of the corn or the bean when we produce its byproducts. They both go into the oil side, effectively the liquid that comes from it goes to producing energy products today. Soy oil does get used as a cooking product too, but primarily goes to be, producing biofuels now. And the meal products go to cattle, hog, and poultry feed. So we are producing food from the rest of that agricultural production, which is a good thing, of course. But it goes to show you the demand, though, for cattle recently has been off the charts,
Yeah,
and I don't believe there is anything. For
unbelievable.
for those that don't know, cattle is a market that is still going through. If you want to call it an inflationary move, that's fine. We are at all-time highs
Yeah,
and pressing into contract highs for cattle right now, which there's been very strong demand for beef. And unfortunately, in the U.S., we don't have enough cattle
yeah,
basically to go to slaughter. to meet beef demand. On the other side of that coin is hogs, which the daily continuous chart, the daily chart here gives a better picture, I think, for hogs. Here's the daily chart of cattle again. We're
Yeah.
basically in this sideways price action. There's, for all intents and purposes, if you look, where we, let me go back to the daily continuous here.
The reason for a lack of supply is there
Mhm.
was like a killing off or a culling of the cattle herds in the last few years. Was it disease? And one question that
Mhm.
probably other people have on their mind, Dan, I don't know if it's conspiracy junk or what, but is it true that China has been accumulating a vast amount of farmland here in the
So
U.S.?
Yeah, I wouldn't say, well, it's hard because China does most of their business through home offices. They don't do it, it's not like the central party of China comes in and says, hey, we're going to buy of this, this, and this, right? They will open hedge funds effectively, or what are called home offices in the US. Our financial system allows for, foreign investment through these offices, so they can almost obfuscate or hide what they're doing. There has definitely been an uptick in foreign-owned farmland, specifically in North and South Dakota, but the percentage that we're finding, at least that reports say, is that it's less than like 2 or 3% of all farmland. So
Okay.
there is not this massive accumulation going on.
Yeah.
There is
You've heard the
certainly
stories too,
Yes, yes. And
Okay.
and 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 by all means, it's certainly a question of national interest. Should we allow our agricultural sector, which is accounts for a massive amount of our GDP, should we allow it for any of it to be controlled by foreign interests? That's another question
Yeah.
for another day, right? Which I don't believe
Right.
they should. But I can understand why China wants to. China's going to do what's in the best interest for China, and China has a food problem. They're not sustainable. They don't have domestic sustainability of their food products, which is why they rely on North and South America for all of their corn and soybeans, some out of the Ukraine and West Eastern Europe as well, but primarily the hundreds of millions of metric tons of corn and soy produced in the U.S. and South America. The 80 to 90% of that soy production goes to China. So the reason that we, over the last 10 years, have even produced soy is because China wants to buy it. Now that we're seeing this pushback, trade wars over the last 4 years, and certainly, unfortunately, our agricultural sector kind of getting played by foreign interests, we've realized, hey, we need to create some more domestic demand or have a reason to producing this on our own if China were to say, hey, we don't want it anymore. And that's the
Yeah.
big push into aviation fuels and other things.
Someone in our community just said that China owns Smithfield, the largest hog producer in the
So
U.S.
yes, and then our JBS, which is a Brazilian-owned company, owns our cattle markets. So we already have foreign interests in our meat markets, unfortunately, coming in and taking controlling interest of some of the biggest slaughterhouses and producers. Which again, I have strong opinions that I don't believe that's a wise choice, or that we shouldn't necessarily allow that to happen. Even though they are a net buyer and it makes sense in China's supply chain to supply China with hogs, pork, and other protein products. It makes sense for them to integrate. It's much like, I have the same reason why airlines in the US cannot be owned by foreign interests. I don't know if anyone knew that, but we have laws not allowing US airlines to be owned by anyone else but US interests. I would like to see those same laws passed in the agricultural sector because I think they're of the utmost imperative for our own security for food purposes. And because
Okay.
hey, a lot of my clients are US farmers and I want what's best for them as well, right?
Right. Okay. So you wanted to turn to the dollar because
Yeah.
a weak dollar would be supportive of higher grain prices, at least nominally.
That's absolutely right. Because so much of our grain and agricultural products goes abroad, such a large amount of our GDP and our export interests. Um, we rely on on honestly and a well I've got mixed feelings on how the dollar affects that because China holds a lot of US dollars. So a stronger dollar gives them more purchasing power. But if they're converting, yuan into dollars, a weaker dollar gives them more purchasing power. But yeah, a stronger dollar typically correlates to weaker prices because our export interests go down. A weaker dollar typically increases the purchasing power. They can use less of their yuan to buy more dollars and spend those dollars at the U.S. grocery store effectively. Since 2010, the dollar's been trapped in this uptrend. We've had these 5 to 10-year periods of sideways price action that have broken out. In 2015, we had the first major leg up. We've gone sideways until through the COVID pandemic. Then we found this rally in the dollar yet again, and have kind of started to settle above the 100 figure in the dollar index. The dollar, I think, is fairly well supported up here, but I also there we go, daily nearest, so we can get the right price data. There we go. But I also think that it's been sitting on this support area where we break below 100 and we're falling right back into the old range we were in, right?
Yeah.
So for the last year and a half, we've had this non-directional sitting on support. Certainly, I think there's the premise that if we break above 106 to 107, we can take the range all the way back up.
Yeah.
But we're very much, I think, in a 114 to 100 range for the next 5 years or so, just like we've been. And I'm just pointing out the patterns of the last 5 years that seems to be seems to be this sideways consolidation, then a major move, because of Fed policy and other. You point to all of these reasons, you get the big move. Then we set up in a range again. It seems like we had that big move in 2020 through 2022. And now, could be in a 5-year period of the dollar going sideways. So I don't have much short-term opinion on the dollar, just because I think it's been very choppy. It's been this sideways between 106 and 100 for the last, year and a half. I kind of foresee that happening until it doesn't. But if we do go above 106, 107, pay attention, because we could be setting up in that much larger range for the time being. And if we slip below 100 on the daily charts, because that's what really matters to me, the big macro look to the dollar for how it's going to affect exports. If we slip below 100, we're going to see that dollar weaken, I think, again. And there's a lot of arguments to be made what the Fed will do in its next cycle, and if inflation will come back, and all of those things. But I wanted to point out this big chart of the dollar, because over the same period from 2020 to 2022 is the period where we would have expected the dollar to be going down when we saw all of these commodities rising in price, right? The inflationary trend, you'd think, wait, doesn't that mean a weaker dollar? And it does, except for the fact that the strength of the US dollar has caused US inflation to be exported and continues to cause US inflation to be exported to the rest of the world. So US consumers aren't getting the full brunt. If anything, our inflation here, and yes, grocery store prices are higher, gas prices have been higher, everybody sees the effects, but it is nowhere near the effects that we've seen internationally, right? Like in places like Argentina, and all over Africa and the Middle East, and plenty of other economies that have seen a much larger inflationary pressure. And it's due to the fact that the dollar was stronger over this period, and we've effectively been exporting our inflation to the rest of the world. And that happens via a lot of agricultural products too.
Okay, interesting take.
I saw a question on cocoa here. Yeah, cocoa was one of the big leaders of the entire rally. I don't cover the softs all too much, but why not? Let's take a quick look at it.
And then Niagara Falls,
And recently, we've had a run up in orange juice prices, coffee prices. Sugar was going absolutely wild here for a while and has now, paired all the way back. And should look at the daily nearest here so you guys can see, how far these markets really came. But cocoa, which is a very which actually is, wow, we're already back to highs here in the September and July contracts. I did not even realize that. But cocoa is a very interesting market because it's primarily produced in one area of Africa and Ghana. on that western coast. There's definitely cocoa produced in Hawaii and in the Caribbean, but nowhere near to the amount that it's produced in Africa. And so they're, outside the fact that this is a very thinly traded market that can get heavily moved around by large hedge funds and other big interests, cocoa had a massive runoff, seems to be taking out highs again. I wouldn't personally be fading this just because it's so illiquid at times, it can just keep going. But when you have such consolidated production in one area of the world, if anything, shakes that up, you can get these very one-sided moves. But I would expect a very big breakdown in cocoa if it ever, finds a top here again. But
Drive two.
just I think I had the softs there. Should I
Okay.
go back to them because
was that cotton? Cotton hasn't
that was
done anything. Yeah.
cotton hasn't done much. We had a major move higher and has kind of fallen back.
Well, that's
Cotton's
good.
also kind of a barometer for the broader economy too.
I don't want us to have to go back to polyester leisure suits.
Certainly.
How about you? How
Certainly
about you,
not.
Dan? I know
No,
you were too young. You never had one. All
no,
right,
I
there
never
you go.
did, but I agree with you. Cotton's a great product. There's demand out of India and China that might be questioned right now because of slowdowns in China that we've seen. So I'm attributing, the
Yeah.
fallback in the cotton prices to those slowdowns in China, which break into question demand for other products and raw goods. Copper and gold and silver may, be in question here too. Although, to kind of just touch on those markets real quick before we got to go, um, I definitely think there's something to be said right now for the strength in gold. I was watching the end of Grega's
Yeah, he
Grega
said just
there,
buy
and
it.
yeah, and I tend to kind of agree with that notion. Another push down into that below 2300 to 2280, 2260. You can see the equal legs down. That's the 100% line, as well as a 50% line I've got up in my chart. That is
Yeah.
definitely the supportive congestion zone. I would be looking to be a buyer. I think there's something to be said that we could have a running flat that has just formed right now. If gold takes off and goes through highs, we'll all, as Elliott wave technicians, be calling this a running flat. That's an A wave, a B wave that goes to a new high, and then a C wave or WXY sometimes, that fails to terminate below that low. It's one of the more bullish signals in the chart. But with all that being said, gold was in a massive, upturn or massive move higher leading into 2020, kind of, initial inflationary move. We then found very sideways price action. It pulled basically into a 50% retracement from where it began that move around 1160 to 1210, right? We finally broke out of that. I look for negative 23% targets as a technical target. That was around 2300. We went above that level. And so now from highs to highs, I kind of see this as maybe a fourth wave extension, right?
Yeah.
Forming up here and looking for another fifth wave to take us towards, 2600 or so. And I don't disagree with Greg. I think that, and I kind of have a little more bearish stance on the dollar, but the dollar has been doing its own thing. The correlation between the dollar and the gold hasn't been perfect over the last 10
No,
years.
I mean, gold's
And I think
recent run and breakout happened with
absolutely.
the dollar rally happening simultaneously.
And I think the breakout in silver is the reason you really have to pay attention to metals here. We were in a much larger consolidative structure for silver. It was suppressed down for a lot of reasons that we don't need to go into today, but effectively, JP Morgan and Goldman Sachs that have silver hedges on, they sell silver, buy bonds. But we're finally starting to break out in silver. The last 2 months worth of breakout here are worth noting because we're finally pushing above the levels we couldn't since
For years.
2021.
Yeah.
And silver, an old trader, Dale, when I was at Rosenthal Collins years ago, big silver trader there told me, silver's the fat lady that sings. It's the last one to move. If gold's gone, you wait for silver to go. And when silver finally makes its move, which, are we targeting, the $50 highs that we've
Yes.
seen back in the 80s, and back in 2011? That's where this market has the ability to go if we start breaking out of this high.
Yeah.
You can see this congestion zone that we kind of held above, this rounding, really what is called a cup and handle pattern, in my opinion, forming. And the move up would target up towards 50. So when this fat lady sings and we go to 50, that might be, the time to start talking about the top for the metals. But before then, I find it really hard to get bearish, certainly in this economic environment, certainly in this Fed interest rate environment, for the markets to get too, I guess, I don't see the wet blanket getting thrown on the parade just yet, is what I'm getting at.
Okay, so Dan does full service brokerage. So you would
That's
actually
right.
have you'd actually have someone to talk to instead of just your mouse. Okay,
That's absolutely
so
right.
and if you're trading commodity markets, you need someone who's on top of it because you could go to the bathroom and everything changes. So Dan, best way for people to find you if they're interested in trading these markets that are coming to life.
Yeah, you can. I'm throwing my info in the chat there. I think it might need to
As,
be
oh, yeah, it's been
copied
there
over
on
to the others.
screen. Yeah,
But it's right in the bottom of the corner there, guys. You can
yeah.
get in touch with me, 312-801-4231. Find me on Twitter, Facebook. Shoot me an email, dhussey@zaner.com. Love to chat with you, if nothing more, just to have a good conversation. But yes, as a full service broker, you want somebody to talk with, work through your trade plan, be a sounding board. And certainly when, like Dale said, in commodities that are such fast moving, leveraged markets, to be that watchful eye over it. You're the captain of your ship. I'm the first mate and navigator is what I like to tell my clients. And so,
Okay.
captaining the vessel is a tough thing. If you can't sit in front of the screens all day, that's why you want to work with a broker that does something like that for and with you. So, uh, as always, Dale, thanks for having me on. And just one quick little last piece of info for people. This run up in the S&P and the NASDAQ, I think it's getting a little long in the tooth, but I think you've heard from me before. I think we're in a massive inflationary cycle like we're in the 90s. So, watch out. Recessions may not be as dip as far down as you may think they will. But we are certainly heading into a period where you got to be thinking, about some form of pullback on the horizon. But I do think in the long term, that could be a massive buying opportunity as well.
All right, Dan, and Dan's from Chicago.
Yeah,
So
yeah.
that's
Dale
another
and I
edge.
cut from the same cloth of the Chicago futures
Well,
markets.
we were taught, I don't know, you're younger than me, but we were taught the golden rule, do unto others as you
That's
would
right.
have them do unto you. So,
It's such a small industry. Dale and I have known each other for a long time. We probably, 2 or 3 degrees of separation, know all the same people, and I have
yeah,
the same philosophy, which is I don't burn any bridges. I only build them, because
like that.
this industry is too small, and everybody knows each other. So you got to take care of each other.
Okay, don't tell everyone about me, okay, man, but about all my skeletons in Chicago. That's why I had to run away to California. No, I'm kidding. But anyway, listen, Dan, thanks for being here. Great discussion. And
Thank you for having me.
we'll talk late summer, early fall again.
Yeah, we'll set it up again, everybody. Thanks for having me.
All right, Dan Hussey, everyone follow him on X. Check him out at Zaner Ag Hedge and consider this asset class to be still the undiscovered one. So thank you, everyone. We'll wrap it up tomorrow for TGIF. Good luck the rest of the day. And remember, don't just count your bushels or your cocoa beans or your stacks of wheat or your coins. Count your blessings and have a great day, everyone. Live it. Thanks, Dan.